This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Open-Top Scrap Trailers, June 3, 2019. U.S. steel production fell to 1.892 million tons, near a multi-month low, on less steel tariffs and slowing U.S. demand. Oil fell to $53.37 on reduced demand from slowing global growth. Prices fell despite major producers like Iran and Venezuela selling close to zero oil. U.S. oil production rose to 12.3 million barrels a day, tying the all-time record from last month. Great for U.S. jobs. Iron ore fell slightly to $105.50 a ton. The multi-year high has now peaked as nervous markets are seeing global slowing. Scrap steel number one remained at $263.33, near an 18-month low. Some exports are softening, and some steel mills are coming offline, which will possibly bring steady prices this week. Hot-rolled coil steel fell slightly to $29.33, a 19-month low on slowing markets and less tariff protection. Copper fell 7 cents to $2.63, near two-year lows on global slowing. Copper is also known as Dr. Metal. The price of copper tells the health of the economy. Global economies are not healthy. Aluminum rose to 80 cents, near a multi-month low again on global slowing. Tariff news. Weeks after lifting the 25% tariff on Mexico, the U.S. announced a 5% tariff on all Mexican goods effective June 10th, rising to 25% until Mexico reduces U.S. immigration coming through that country. The U.S. said it will fast-track a trade deal with England when they leave the European bloc. China and the U.S. are now blaming each other for backtracking in negotiations. The sixth largest U.S. bank, Morgan Stanley, forecasted a global recession if the U.S. escalates the trade war with China. Interest on the U.S. 10-year bond fell to 2.13, the lowest in 20 months, as nervous investors flock to safety by buying bonds. The more they buy, the lower the rate. As a positive, though, many home mortgages use this rate as a benchmark, so mortgage rates are declining. Time to refinance. First quarter U.S. corporate profits were down 3.5% versus a positive 2% forecast, and that's on a preliminary estimate. This is the largest decrease since the fourth quarter of 2015, caused by the tariff war, and as last year's tax cuts are not yet having the multiplying effect for the future that had been forecasted. Economic growth for the U.S. for Q1 was adjusted down to 3.1%, slightly below the original 3.2%. Overall, a great number. But the question is, will Q2 be lower due to many signs of slowing and possibly a negative inventory adjustment? May's preliminary consumer confidence number was adjusted down as more people are becoming concerned about all the tariffs. But overall, it remains near a 10-year high, which is just great news. Wall Street's Dow Jones fell a big 771 points to 25,586, the sixth week of declines as global trade wars escalate, with the new Mexican tariffs set to start next week. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.